Welcome to the Silent Trading channel on Tuesday the 19th of May. Today we'll be going through the gold chart to check and see if right now the chart is ready to expand above, or is it still going to sideways before breaking below, right, before dumping on the price. So we'll be checking out to see with a deep analysis on the chart's movement, each candle movement, right? But before we start, please subscribe, like, comment and share if you like this video and to support me in my trading journal. Today I'm going to be starting on a 4-hour time frame, on a 4-hour chart first, to check and see if there is any visible bullish price action or not, right? So we'll check on the 4-hour chart. The 4-hour chart, right, recently it has dumped, right, after trying to form a new high and wasn't able to do so, right? After a bullish price action was formed over here, okay, and then trying to form a new high. Wait, can I make it into a deeper color or a brighter color? Wait a moment. No, I'll make it a blue. Okay. A price action was formed, a bullish price action was formed with a 4-hour chart, right? Over here. This bullish price action was formed and went up all the way to complete this bullish price action by attacking resistance, right? Before a retest or a retracement, and then push up to break structure, right? What you guys call, or what the ICT traders call, a break of structure. This structure break, right, leave a fair value gap that you guys call a fair value gap, correct? And then, wait, I'll be analyzing this spot over here first, okay? So, because I'll be breaking down the chart one by one. The chart pushed down to form a bullish price action, push up, right? Push up to break resistance, which means it is a change of structure, correct? A break of resistance and a retracement or retest while not attacking support, and then pushing all the way up, right? This break above, it is telling us what? It is telling us that it is a break above with unmatched volume, right? A fair value gap. By what you guys call a fair value gap, you only know that it is a fair value gap, but you need to understand the narrative behind all of this fair value gap, right? This gap is created due to a heavy accumulation of volume, either by heavy volume by the big money, or a heavy volume accumulation below by the small money, by the retail traders. It can be anything, right? But a break above indicates a heavy accumulation of volume, a heavy injection of volume, and then it break above, right? 3 candle breakout, leaving spaces and gaps, correct? So these gaps are what you guys call a fair value gap that has to be filled either by the near future or either by in the far future, right? In the far future, what does it mean? It means that the chart can go all the way up, right? On its trend, on its initial trend, it can go up a few 10,000 of pips, a few 10,000 of points of movement before it start forming a bearish reversal or a bearish price action, and then start coming back down, and it will come back down to fill all of this gap, right? So it can fill in the near future. It can come back to fill first before breaking up, breaking above or expanding above, or it could go all the way up and then start forming a bearish price action and then start coming down to fill this fair value gap, because this is what we call an unmatched position, unmatched volume, unmatched orders, right? Due to a heavy accumulation of volume on either side, right? So as you can see, it does break above, right? And after breaking above, it tries to break above further by retracing, as you can see over here, right? As you can see over here, it tried retracing to take out buy side volume, correct? Tracing to take out buy side volume, but wasn't able to do so. It tried break above once more, right? It only managed to take out a little bit of buy side volume and then try to break above once more, and there are still people panic buying or follow buying, right? And then try to push down, retrace to take out buy side volume once more, right? And after that try to break above again, right? This whole pattern trying to break above is telling us that the chart is still in a bullish trend, but wasn't able to really break above and break higher, right? Break higher by forming higher high and higher low non-stop, right? It is forming higher high, higher low, and it is also forming higher high, but it is telling us that it is soon not being able to go up further. Because why? Because each break above doesn't have much body candle or candle body, right? And then after a break above for the third time, trying to really expand, right? It wasn't able to do so. So the thing it does is it pull back, push down to attack support, then attack the next support, right? And the next support. It is already telling us that this trying to break above over here by forming a higher low and higher high. This higher lows is what? Is a support, right? Was a support. That this is a support. This is also a support. So both of this support, or three of this support, was meant to be used for accumulating buy side volume from the start. Because after forming three support, the chart then break below, right? The chart then break below to attack support and start accumulating buy side volume. And after accumulating buy side volume, it dump, right? Accumulating buy side volume on all of the support before trying to form a bullish price action once more. But this bullish price action was formed to trick buyers into believing that the chart is going to be on a bullish engulfing, right? Trick others to believe that this is a bullish engulfing and the chart is ready to go up further. And after tricking people into believe this is a bullish engulfing and the chart tries to break above, right? It then really tries to break above by pushing up, forming a bullish engulfing, push down, retest, right? And then try to push up once more. Was able to break resistance but wasn't able to break high, wasn't able to break past previous high over here. Then start forming a bearish reversal once more, right? And after forming a bearish reversal, it dumped, as you can see. Why is it doing the chart pattern this way? It is this way because the whole market is trying to go on a bullish expansion, is trying to go up, but really wasn't able to do so because there are people still believing, right? The mass or the majority of the people are still believing that the chart or the gold chart is still going up. The market is still trying to go on a bullish expansion. So when most of the people are believing that the market is trying to go on a bullish expansion, they are always trying to buy, no matter the circumstances, right? They are either buying by panic buying, or they are buying at retracement or retest, right? So when most of the people are buying at retracement or retest, this retracement and retest are the spot to harming themselves, right? Are the spot to becomes the spot to be committing suicide. Why is it so? Because the market, the big money knows where the traders are going to buy. They are going to buy at retest. They are going to be buying at retracement. So they will be waiting to trap buyers buying at retracement and then dump, right? You can see this retracement is where buyers is also buying, and then the chart dump, right? And after forming another bullish price action and trying to break above, but was able to break high, right? Was able to break high, but wasn't able to have a body candle close above high, which means doesn't really break resistance, right? And also wasn't able to even break resistance over here, right? Because the candle pull back, close below resistance, which means an unsuccessful break of resistance. An unsuccessful break of resistance means the chart is going to dump, and then it start dumping but doesn't doesn't dump sharp, but a slow dump by what? By going on a slow sideways downward direction. Going sideways downward direction by accumulating buy side volume, right? Accumulating buy side volume by the first candle, second, third, and fourth candle, before a dump to take out all of those buy side volume that have been accumulated, right? All of this has a reason to happen. It doesn't happen just because it is happening. It happens for a reason, right? The market is always trapping, accumulating, and then taking out, right? They are accumulating, then trapping buyers above. So where is buyers being accumulated? Buyers are being accumulated at support, right? And then being trapped above, right? You bought at support, and then you get trapped when the market dump. When the market dump, you do not only get trapped, but you also get taken out if your portfolio is not big enough to hold on to your position, right? So you either get trapped or you get taken out. And after you got taken out, the market will start expanding above once more. And if the market starts expanding above once more, and there are still people panic buying and follow buying, the market will also dump once more. So this whole thing that the market is doing right now, before the dump, right? Before this dump over here, this whole thing over here is the market going to a sideways, trying to take out buy side volume as much as possible. But people who are buying, even though they got their stop loss swept multiple times, they are still buying because they believe the market is only dipping to expand above. And since so many people are waiting to buy, at the end the market then dump on them. And why is it a dump? A dump because most of people who are waiting to buy a retracement, are waiting to buy a support, are waiting to buy at a golden ratio of the Fibonacci retracement, right? At a 50% of the Fibonacci retracement. So when all of people are buying at retracement, are buying at retest, or even buying at support, or what you call a demand and supply, right? They are buying at demand. The chart will then dump on them, correct? And when the chart dump, the chart, for it to form a bullish price action and then start expanding above, it needs to form a good bullish price action, right? And is this a good bullish? Is this a suitable bullish price action yet or not? Nope, this is not a suitable bullish price action. A bullish price action must first be formed by the candle pattern that you call a bullish engulfing, and then break resistance, right? And after breaking resistance, it must retrace and then start expanding. But if it wasn't able to do so and it start going into a sideways, it is not a bullish engulfing, it is not a bullish price action, it is not a bullish reversal. It is just going in a sideways before it starts dumping further, which means the next time the chart dump, it is going to dump all the way down to where? To the next support that is on the daily time frame, which is at least this spot over here, right? This is the next target for the chart to dump if it is really going to dump. But it wouldn't dump all the way down here. It may dump all the way to this buy limit over here or this buy limit over here before reversing or before pulling back, right? So all we need to do is we wait for the target price to buy and wait for the target price to sell and take profit. So we do not know anything right now because it is moving in a sideways direction. If it starts expanding above, it is an expansion above to take out the sell side volume before forming a bearish price action like this, and then retrace and then dump. So if you're looking to sell, wait to sell if it breaks high, right? And wait for it to form a bearish price action. If you're looking to buy, wait to buy at this spot where I've placed my buy limits beforehand. Okay, so for today, that's all I'm going to be here for you guys, and I look forward to seeing you guys tomorrow, and I hope you guys get profits today and be profitable consistently. Okay, so for today, I'll see you guys tomorrow. See ya.